Hello, this is Brian Shannon from Alpha Trends Blogspot. It's Monday, the 19th of February, 2007, and we're going to go take a look at some stocks for trading on Tuesday. I've got the NASDAQ on the screen first just because I wanted to take a look at that. Didn't get to do a review on Friday because I was in New York for the Traders Expo. But this NASDAQ is looking pretty good to me these days in here. It looks like the consolidation that we've been seeing over the last couple months is now found the buyers regaining control. We've got that 10-day moving average, which is rising above the 20-day moving average, which is above the 50-day moving average, and they're all advancing. We've also got this market making these little higher highs and higher lows in here in the short term. So it looks like the short sellers might be in for a little bit of squeezage in here coming up. And it looks like on this 30-minute time frame, 44.60, probably down to 44.50 is where our more important support is for the short-term time frame. But I think that the NASDAQ is looking pretty good and probably about ready to play some catch-up to the S&P 500. Let's look at the stocks now, and I'll take a better look at the markets overall after the close on Tuesday. Brooks Automation, symbol BRKS, reported big earnings over here, better than expected. The stock was up on big volume. Its subsequent pullback was very shallow, and it did that on lighter volume in here. But we've been seeing the buyers regaining control once again. We've got the 10, 20, and 50-day moving average all heading higher. Weekly time frame, it looks like the stock still can probably make it up to at least $17 a share. That's going to be our initial target here is $17 a share. So let's take a look at the 10-minute time frame. And we can see that the stock does have a little bit of resistance intraday from last Wednesday and Thursday at about $16 a share. So what I'd like to see the stock do would be to gain a little bit of strength, push past that $16 level is where I would purchase it. And then I don't think there's any reason to put a stop any lower than about $15.72. And we're looking for a move up to $17 a share. So our risk in this case would be about 28 cents for the opportunity, hopefully, to make $1 in shares of Brooks Automation. CyberSource, symbol CYBS, is another company that reported better than expected earnings right in here. We had increasing volume and biggest volume right there on the day where we had the high being made. Subsequently came down on lighter volume here on these two little moves lower. So it looks like it's still a strong stock to me. Maybe it looks like it has found some support in here at this prior resistance near just above $12 a share. If we look at the weekly time frame, you can see that we've got these highs from back last year acting as that support area. And on the monthly time frame, it still looks like this stock's got some room to go. So let's take a look at how we want to play this thing. It's a little bit sloppy in here, but I think if it gets above $12.50, that's where you want to purchase the stock. I think that would be a sufficient higher high. If we take out this high, in other words, we've got these highs that are lower, but I think getting above $12.50 ought to put the buyers back in control. We can put our stop down here. That's $12.30, so only 20 cents of risk in here. And our price objective is going to be pretty conservative. We're going to look for it to move just up to $13.25. Just because that's the price target doesn't mean you should sell it there. Consider selling half and then raise your stops and listen to the message of the market if it allows you to continue to hold it. SCUR Computing is another company that reported better than expected earnings. So these are all companies that have some would appear to be solid fundamentals, and it brought out new buyers into these stocks. So this stock has been holding up very well, right above that rising 10-day moving average. And the weekly time frame, you can see it looks like the stock has room, probably up to these levels in here, but that's up at that's about $10.46. We're going to make our targets. I picked out one of these lows. I don't remember what it was, but $10.30 is, I think, that low right here. So we're going to make that our target. It's obviously not going to be that precise, but we'll see what happens when it gets there, if it gets there. So in order to purchase this stock, I think the way to do it is to buy it above this little intraday resistance level that we've seen the last few days, which is $9.05. We could set our stop at $8.86, so right about down here. That's a risk of about 19 cents a share. And for looking at the stock to go hopefully to $10.30, that would give us $1.25 in potential upside for that 19 cents risk that we're taking. One more long, and then we'll take a look at a short as well. GigaMedia, symbol GIGM. This has been in a nice uptrend. It looks like it's just consolidated here. We've seen the volume diminish. I think it looks like it's about ready to get going again and break past these highs that have held it back over the last 8 months or so. Getting back above there puts the stock back in the all-time high, actually not all-time high territory, but definitely multiple year high territory you can see. And it's tough to look for a price objective based on anything that's happened back here, in particular when the stock came down so quickly over there. So what we're going to do is we're going to call our price target for GigaMedia $13.50 a share. We want to buy it above $12.45, target $13.50, and our stop in this case would go at $12.22. So that would give us 23 cents of potential risk for the opportunity to hopefully make $1.05 in shares of GigaMedia. CCJ is the symbol for Cameco Corp, and this is a uranium miner. But and I realize there's a big bullish story, so don't bother emailing me about that. But the stock looks like it's heading lower once again, and I think it's good for a trade. Probably down towards about the $35 level, so right down towards this area. That's where we had that gap, and that's also where we saw, not much trading in here. There's kind of like a little air pocket in this area, so that I think it could get down to that $35 level. What I'd like to do is sell the stock short below $36.30. That puts the sellers back in control of the short-term trend here. You can see Friday there was a little bit of strength late in the day. But getting below $36.30, I think you can sell it short. Let's put our initial stop at $36.55. That's 25 cents of risk. And with a target of $35 a share, that will give us the opportunity, hopefully make $1.30 in the stock.